If you click this video, you may be interested in how to sell a company. This video is for any entrepreneur or business owner interested in selling a company one day. Maybe you're bored with your business, or you're burnt out running it, or you've got a burning passion to do something new and you don't want to just let it go. Or maybe you just want to sell a business because you've never done that before. Maybe you want to feel the validation and esteem of something that you put your hard work into building be valued and bought by somebody else. Or you could simply just be curious to see if buyers would find any interest in it or would find it valuable. And by now you might be thinking, how much work do I have to do to prepare it for sale? If any of those thoughts are going through your mind, you're in the right place. In this video, I'm going to teach you the most important thing about selling your business: your income statement and balance sheet, what they need to look like, why buyers are looking at that first. I'm going to show you what buyers expect them to look like. I'll talk through why complicated financials stall and sometimes kill deals. I'm going to show you how I simplify income statements by putting together a seller's discretionary earnings summary. I'm going to show you 4 real-life examples of businesses that I listed and what those income statements look like. We're also going to have a little fun. I'm going to ask you which ones sold and which ones flopped, and then I'll show you. Then at the end, I'm going to talk about what the market looks like right now today and how it's going to look over the next 3 to 6 months. I'll also go over some patterns that drive business valuations up, and I'll talk about the listing process and an overview of selling your business. And then at the end too, I'll share what the next steps are if you've got a mild curiosity, a growing business that is cash flowing, and you want to know about the valuation of it too. So if you're interested in selling your business one day, this video is going to show you the bare minimum things you need to do to your financial statements, particularly your income statement, so that buyers will bite. Keep on watching. Hello, Flippa Universe. Thank you very much for joining me for this webinar about why some businesses sell and others don't. I talk a little bit about financials in this one. This is where financials will help a business sell, or they can make it flop. So we're going to get into some juicy bits. I'm going to show some real live examples of businesses that I've listed and let's jump right in. A lot of times what happens is businesses that are looking to sell, founders that are looking to sell, have some very simple questions they're trying to figure out. Is my company valuable? Who are the buyers and what are they interested in? Well, I can tell you the first place that we start and why we start there here in just a little bit. It's all about your financial statements, your income statement and balance sheet particularly. I'm going to take us through some case studies. We're going to get into where the financials and why the financials are kind of the narrative of the business, where it's been in the past, where it is right now, and where it's going. It's a little bit like a pirate's treasure map. The financials allow a buyer to see kind of like where have all the steps been that you've gone before, where you've tried to dig up gold in places and didn't find anything. And then that helps them to understand with some conversations with us when we're doing buyer seller calls, where to go in the future so they don't make any of the same mistakes that you've already made in the past. My name is Nate Lind. I've been a business broker for long time now. I started buying businesses in 2011, sold my first business in 2016. There was a software company I sold to an e-commerce shopping engine, built some analytics around it that showed subscription based entrepreneurs if they were making any money or not, because I was selling supplements on a subscription, and had a really profound exit there. And I've sold numerous companies. Just in the last few years, I've sold over 22 companies for $122 million in total transactions. We're going to talk about financials here, folks. They are the number one factor and key into selling a business. Here's something I deal with so often: sloppy or complicated financials. They are an absolute deal killer. This is where, as a business broker, I'm going to spend time with any potential founder or owner of a company who's looking to sell their company. We're going to look at your financials before we even list. I'm going to take the time and effort to help you prepare your financial statements so that they sing to buyers, so that you're not off key, that you're right on pitch. hand-done spreadsheets, if you don't have an accounting system, that's an instant red flag to buyers. They don't have trust. They don't have a feeling that you're credible. They don't think that you're real. Like that's like the minimum barrier of entry that we need to have when we go to market. So if you're not already using an accounting system, you should get one. QuickBooks Online is super simple. I've been using it for 25 years, and Xero is another one. There's a couple of other accounting systems that are out there. It's absolutely mandatory for selling your business. The hand-done spreadsheets, no financials at all. It's just not going to sell, or it's going to be really, really hard, or it'll be a really tiny transaction, or you're going to get a really low multiple. Like that's what happens when we just don't have credible financials coming out of an accounting system. Frequency that they're updated. They must be updated monthly. We can't have this where they're updated once a year only because your accountant needs it for tax time. That's not going to make it. When we're listed live and out on the market, buyers are asking me every month for updates to the financials. How are things looking? Is it going up? Is it going down? Is revenue going up? Is profit going up? Is revenue going up but profit's going down? Is revenue coming down but profit's going up? They need to see that stuff, and their lenders are going to need to see that. So if you're looking for a larger transaction, something over $1 million, those lenders, they need that. They're going to absolutely require it. Ideally, shoot to have your financial team complete and close your financials by the 10th of every month, following the month that was just finished. So for instance, let's pretend that June just ended. By July 10th, that should be the timeline, the goal. You tell your financial team or whoever's doing your bookkeeping to have everything done and orderly. Let's talk a little bit about buyer psychology here. This is the important part. Simplicity, clarity, that gives buyers confidence. When buyers have confidence, they're willing to shell out money. They're willing to go the extra mile to go get financing. When buyers of transactions under $5 million are out there seeking financing, more than likely they're getting an SBA loan. And if they're getting an SBA loan, they're going to have to collateralize their house. So we're literally asking people to bet their house on your business, of which they don't know anything about. That's a huge ask. Would you bet your house on someone else's business that you can't see the financial picture? I bet not. I sure wouldn't. So we're asking them to risk millions of dollars. If there's bouncy profits or confusing financial statements, that really screams risk to them. It stalls deals until those can get fixed. So if we go to market and that information is obscure, or there's stuff that's like nuanced that we dig into later, sometimes we've got to take a time out. We got to go back and work on it again and then come back to market. And oftentimes that's the way it stalls deals. Sometimes it totally kills them, and it may kill it with that one particular buyer. If a buyer finds out that there's some undisclosed expenses or something that was forgotten, or maybe there's some income that was booked that isn't really going to happen. Oh man, I've seen that happen numerous times where it kills the credibility and trust that's forming, which is really tentative in the beginning. Think of it like dating. In the beginning, if you dump out, if you disclose something or someone you're dating finds out something kind of negative about you on the first or second date, they may be kind of thinking about pushing back a little. So the financials really are the cover of your book. They need to be clear. They need to communicate exactly what it is the business is doing in terms of profitability, in terms of expenses, just like my book, Maximum Exit. I'm communicating to an audience of entrepreneurs I'm the business broker that's going to sell your company for the most of all the other business brokers that are out there, of all the other brokerages, or over you yourself if you decide to sell it by yourself. The income statement and balance sheet are the cover of your book, and they are judged almost instantly. That's the first thing that buyers are looking for when they're asking me for information about a business after they sign the non-disclosure agreement. Here's another piece. If you're selling physical products, it is really helpful if you're on the accrual-based accounting method. Now, if you don't know it versus cash, now if you don't know what that means, let me give you a simple example. If you have purchases of inventory, let's say it's $100,000 in January, and then you have no purchases in February, but you have sales in January and February. And on your income statement, if all you see is $100,000 cost of goods sold item or product inventory item on your income statement and a zero in February, you're probably on a cash-based accounting method, and you need to be on an accrual-based accounting method. It's not that complicated. I'll talk a little bit more about that as we move along. But the problem with that is it looks like a roller coaster of profitability. Buyers can't see the true profitability of your company unless they can see what your inventory shipped each month looks like. And it's a real simple process. You book your inventory. That $100,000 gets booked on your balance sheet as an asset on inventory. And then at the end of the month, you download a report from your CRM that shows whatever the shipped goods are by SKU. And then you put together a little report for your bookkeeper that tells her or him how much each unit by SKU is. So she or he can then calculate the actual cost and do a journal entry, transferring off of the balance sheet onto the cost of goods sold, the actual cost of goods that were shipped that month. That's an accrual method. It's just a simple way to explain it. The bigger the transaction, the more that's required. We can sometimes get away with that with deals under $1 million. Once we get over $1 million, it's really hard to get away with it. When you're over 10 million, absolutely not. You have to be on accrual. Really, like the bar, I think I see it's like around $2.5 million. You have to be on accrual if you're not at that point and you're selling a physical product. And there's some tax rules and regulations. I think it went over 3 million. I may have that wrong. If you know what it is, put it in the comments below. But there is a specific volume size of gross sales that once you hit that or exceed that, the IRS actually mandates that if you're selling physical products and holding inventory, you have to submit your financial, your tax statements and your taxes to them on the accrual method. Very, very simple fix. It does not take very long to do this. I have taken, I've got a case study you can see on my YouTube channel of a $6 million transaction. I helped them sell for $11.5 million. We had to do this. We had to convert them from cash to accrual. And we don't have to do it back to the beginning of time. We just had to go back 12 months and do that. So the beginning of the previous fiscal year or the trailing 12 months is really the most important time that we need to do it. If we can go back 2 years and do it, that would be incredible, but it's not always needed. So the bottom line here, messy books destroy confidence. It lowers the offers, it lowers the number of offers, and it also, sometimes we just won't get any deal because it's super complicated. Clean books builds confidence. Confident buyers pay more money. You get more money. That's the goal of this. That's how we get the maximum exit for you. All right. I'm going to do a case study showdown. I'm going to show you 4 different businesses and which ones sold, which ones didn't sell. But first, we're going to get into a little bit of the process of how a buyer looks at the financials. And I'm also going to talk through how I simplify them as well. Give me 1 second. Let me see if I can switch over. Okay, I need to stop sharing and share a new file. Stop. Here's my pretty face. And let's open up the next one. Let's start with an e-commerce business. Okay, so I'm going to share Share screen. Amazon e-commerce business. Oops, hang on a second. I don't want to give away the sold or not sold before we get into it. All right. Thank you for bearing with me. Amazon, here we go. Okay. So let's see if I can widen this just a little bit. Bingo. All right. Now we're cooking. So this is a perfect example of what a 1 year income statement looks like that a buyer's looking for. They want to see all 12 months going across the top for a fiscal year, and they want to see the total on the right. Zero does this backwards and puts it all over on the left, and I have to undo that every time. Drives me bonkers. But that's okay. So this is exactly what a buyer is going to be doing. They're going to be coming through and looking at the income statement. I'm going to zoom in here a little bit. View, zoom, boom. Let's get in here a little bit. Okay, so they're going to be looking at the income and all of the sales, if there's any reimbursements, if there's any refunds, they want to see that all netted out up top. If there's any chargebacks, if you're on Shopify or if you're selling on your own website, that's what's going on there that they want to see. Let's pull this down a little bit. We're going to, a little too fast now. Thank you, Google. It's all going to get totaled up in your gross profit. And then a buyer's going to come through here and they're going to be looking at each month, the gross profit, and just looking for trends. They're curious now here. They're curious critters. They're looking, okay, so boom, we see here May, big month in May, drops down in June. They're going to ask, why was there a big increase in May? They're going to ask me this every time. So when we're listing your business, we're going to look at this and we're going to answer this ahead of time. There was a big sale in May. Maybe this was an Amazon company. Let's just say there was an Amazon Prime special going on in May. We had a bunch of sales. We're going to say that ahead of time. So we prevent having 200 or 300 buyers asking me the same question, because that's what happens. This is really serious, folks. I get 200 or 300 buyers looking at these things, and they'll ask me the most nuanced question. And the reason why this is important is every buyer is either a bean counter or they have a bean counter on staff or under contract. If it's an individual investor that's looking at buying a business, they may hire a company that's doing some due diligence for them. If it's a larger company, then they have somebody that is really in the weeds with the numbers, are looking at this before the visionary steps in. A lot of times people are really interested in the strategic. I want to sell to strategic, Nate. They're going to pay 10x. Okay, they may pay more, but not until their bean counter tears apart your financial statement and starts asking these questions. So we're going to be looking for trends here. What do these numbers look like? Okay, so it's coming down a little bit. We're seeing some lower numbers in September, October, November, same thing, December. All right, here we go. So we're just looking at trends here. That's what we're doing. We're just curious critters here, pretending we're a buyer, just looking at some numbers and where they're going. That's a big one. And then let me tell you the next big one. Dun, 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 dun. Where is it? See, even I'm having a hard time finding it. Okay, here it is. Cost of goods sold. Bam. Cost of goods sold. Inventory. Inventory was cited as the number one item that is manipulated nefariously by sellers. I'm not saying you're that seller, but every class has a bad apple. And unfortunately, buyers have caught on to this. And some other deal or some other seller and them as a bad apple now reflects poorly on the entire industry. So this is what happens. These numbers get messed with. A lot of times there'll be somebody who buys a whole bunch of inventory in December, and then they'll book it as inventory sold in December to lower their tax amount. And then they'll undo that in January. January is a regular sales month, no big deal. That's manipulation, folks. It's tax fraud. I've had sellers tell me that that's what's going on, and I have to step back. My rules and ethics will not allow me to present fraudulent transactions and move into those. So this is another huge number that seller or buyers are looking for. They're going to look at this on a month-to-month basis. They're going to be looking to see, okay, where's the trend here? Okay, so we've got some numbers that are going up here in May. We had a higher sales number in May. Okay, that tracks. If this number were to have gone down as a weighted average or as an average compared to the other months, you can bet the buyer's going to say, Nate, why were the sales up in May, but the cost of goods were down? And I need to have an answer. And it better be a good answer, because it probably means we're on a cash-based accounting method and not an accrual-based accounting method. And the buyer is going to tell me, I can't understand the profitability of this business. And at that point, I'd feel a little sheepish because I should have seen it way before we ever went to market. But when I was a younger broker, sometimes this caught me flat-footed when I was learning this too, how important this was. They're going to come through, looking again. They're going to be looking, see here, like this lines up nicely. See, this is $29,000 compared to 102, $28,000 compared to 98. This goes back up again. Okay, so it goes up to $48,000 compared to $182,000. That's passing the sniff test. Same things going on here. So sometimes what we'll do and what buyers will do is we'll add a whole bunch of columns here, and then we'll make percentages as a percentage of the gross income, just to see how do the percentages look. A lot of buyers do that. They get really into the numbers here, folks, man. They just like go bonkers over it because they're trying to figure out trends. They're trying to understand risk. They're looking to understand what is going on with the business. What is it that they're going to inherit? What's the last couple of years look like, so they can somewhat predict what are the next couple of years going to look like. And that's all really important information. Once they're done looking through the cost of goods, then they're going to start looking at the expenses. They're going to start seeing, wow, this thing doesn't have hardly any advertising. What's going on here? So this might be an Amazon business that just gets a whole bunch of organic Amazon advertising. Nope, I'm wrong. Here it is. Advertising was under cost of goods. Sometimes it's under cost of goods. Sometimes it's under expenses. I've had arguments about it either way, but at least it is reported. But it's still not very much. Amazon advertising $7,000 compared to $1 million worth of cost of goods sold, or $1.5 million of total sales. That's pretty sexy. Buyers like that. They're looking at some other things in here. Some pretty simple stuff. Auto expenses. If you've got a car payment, if you're doing some auto expenses, it's normal. We'll add that back. I've got a bunch of videos about add backs on my YouTube channel. You can go take a look at Nate Lind, business broker, on YouTube, or Nate Lind add backs. You can just Google Nate Lind add backs and it will pop up. They're looking at contractors. They're going to be interested in what your staffing costs are. We'll add back your meals and entertainment. Here's some inventory storage fees. So it looks like this company had a warehouse, and they were holding some inventory off of Amazon, so they weren't getting charged the expensive Amazon long-term storage fees. They've got some merchandise samples. This is usually personal discretionary spending. So I see a lot of Amazon e-commerce entrepreneurs put all of their Amazon sales on their business's books as merchandise samples. Talk to your accountant. That could be a legitimate expense. If so, we can often, and I know in this case we added that as an add back, and the buyer chagrined and smiled and allowed it. It's just one of those things. As an e-commerce entrepreneur and business broker selling Amazon companies and Shopify companies, I could do that too. But I live in Puerto Rico and I only have a 4% corporate tax rate anyways. I don't bother with that sort of stuff. Some other things that buyers are going to be looking for: payroll expenses. This is really helpful if we break this out and so I understand what is the owner's payroll expenses, if any, and what are the employees or contractors' payroll expenses separately. I need to break this out every time because owner payroll expenses is an add back. The International Business Brokers Association gives guidance to thousands of business brokers and and hundreds of thousands of transactions that a business owner's personal payroll can be added back as an allowable seller discretionary expense add back. So that's kind of a standard. If there's two business owners and both owners are operational, that might get a little bit more dicey. That's not often common that we can get all the owners of the business added back as an add back and added to the multiple. I've got a couple of videos about multiples again and add backs and business valuations. If you go to Google, you can type in Nate Lind business valuation, or you can type in Nate Lind income based method valuation, or go to my YouTube channel and look for the income method. I talk a little bit more about that in allowable. And then also in the add backs, I talk about it. Down here, now we're looking at professional services. If you have an accountant, we will often add the accountant as an add back. If you have any professional services, if you're using a business coach, if you're using somebody else to help you with the exit, retainers paid for exits from any consultants or brokers, etc., those are all add backs as well. We put those and itemize those under professional services. We've got some other simple things in here, some rent and lease. A lot of times people will put their personal residence as an expense. If the business doesn't need an office or lease some space, we can add that back. If it does, we need to leave it in there. Shipping, if there's some shipping costs, that's something the buyer is going to be looking at. What we're trying to get down to is what is the cash flow the buyer is going to get the next year after they buy this business. So we're going to boil all of this down here to net income. We're going to add back some of the items that we saw in here. And I'm going to do for you complimentary for those of you that have a business that's at least 2 years old, that's doing at least $200,000 in this total column of net income. If you're around here or more, that's when I can step in and really be effective with my buyer network. And I'm going to put together a seller's discretionary earning summary. This is what I do. I take all of the revenue, I take all of the cost of sales, I take all of the operating expenses. Looking at this, looks like I could have or should have taken the cost of goods sold and put them in here, but we put them under operating expenses, made it simple. And then we added back the auto expenses, the meals and entertainment, the owner's salary and the taxes, the owner's personal cell phone, the owner's personal travel, and get, boom, our total seller's discretionary earnings. This is then what I use as the basis for the multiple of the business. So $377,000 is what this entrepreneur's e-commerce Amazon store was doing. Now, let's take a quick pause. Leave in the comments below. Did this business sell? Do 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 do. Let's see. A bad impression of what is that, Wheel of Fortune, or is that Jeopardy? Yes, it sold. Shabam! I knocked this one out of the park. We listed this thing for $1.4 million, sold it for 1.9. I love it when that happens. Their revenue at listing was 1.5, SDE was 3.7, 3.51, or $351,000. Listed it at 4x multiple. At the time of sale, they grew it to 1.6 million. Total SDE was $417,000. The final sale multiple was 4.76 times. I had 89 buyers inquire on it. I got 5 offers on this deal, and the industry was in e-commerce. Shabam, sold. Love it when that happens. All right, let's come back over here. Let me stop. Okay, let's switch over and I'll show you a digital marketing company and its profit and loss statement. Open up P&L. I'm not even going to bother going into the balance sheets on this. Honestly, most of the time, people's balance sheets are totally fine. It's the income statements that I'm focusing on for this, because those often get pretty complicated and really jacked up. Okay, so share screen. Digital marketing company 2, share. Okay, I'm not going to go line by line on this one, but you get the gist. Same look and feel. This is like what a QuickBooks export will make these things do. It's a profit and loss statement by month, and then you pick the time frame of the time frame. When I'm working with my clients, I need the last 2 years and the trailing 12 months. So we'll get 3 different versions of this. All right, so here we've got some numeric system in their chart of accounts, no big deal. We've got some affiliate commissions, so they're making some money on affiliate income. So that's all their affiliate income. This was a Canadian company, so they've got in Canadian dollars. They're marking what came in, their marketing class, and how they sort out and separate their income. And this is helpful. This is really helpful if we've got, this is a digital marketing company, so they make money from affiliates. They make money doing a marketing class. They've got a total marketing class. They've got this thing, this product called Connect My Leads. So this is, how much money they make from that particular, service offering. They have some consulting and website development income. They've got some income from doing Facebook ads and Facebook consulting. They've got some income from Google ads and doing some Google ad consulting. They've got some SEO income as well. And they've got all these different variations or these revenue streams listed out, which is this is really helpful. A+ to this digital marketing company. If you're out there and you watch this, you know who you are. You did a great job with this. And so here we've got all of the total income. And then down here, we've got cost of goods. These should equate to the revenue streams up above. So they've got cost of goods for affiliate commissions. The Connect My Leads they've got a cost of goods here. Google, cost of goods. So they do this particular digital marketing company focused on the mortgage and refinance industry. So they've got some concierge services around that. They've got some online tools, SEO management. So here's all the expenses as they relate to those income items up above. Love that so much. A++++. Thank you very much for doing that. And then we've got some expenses in here. We've got some overall kind of advertising, total advertising promotion. We've got I've processed in here some questions for them and also some comments. This was a working document that I was using back and forth with my client to ask them, what did each of these mean? So we added back their automotive expenses. I think I had a question for them about their merchant processing. Yeah, so here's like me asking, are there any foreign transaction fees that would not be paid if the buyer was a US-based company? So I was thinking to myself, okay, maybe a US-based company is going to buy this. If there's anything that they're not going to pay, like some foreign transaction fees, I want to know about it because I want to add that back in here. That's the level of detail, folks, that we get into in this. Really detailed. What else do we have in here? We've got some charitable donations. Those are often easily put in as add back. We've got wages here. Nebulous. I do not know what wages. And then I'm asking, what, if any, is the owner's benefit? So I needed to find out what is the owner's wages because I want to add that back in. We've got staff benefits, a bunch of other stuff in here, bonuses. Sometimes we can add some of that back. It's really hard to, though. Whatever you're paying your staff, that's probably what they're going to expect when a new buyer takes over. And I can tell you, like, everyone wonders, is the buyer going to fire all of my staff? No, never. It never happens. I don't know where that myth comes from. A buyer wants the team exactly as it is. And if they can get you, they want you too for a while, especially and at least for some transition services and some transition time. The only people whose heads get cut are the accountants. Usually the bookkeepers and accountants, they usually get laid off pretty quick. Not always right away, but eventually most buyers have their own accounting, bookkeeping, CPA, et cetera, that they want to use. That's the only group that I've ever seen or heard of post-transaction that gets let go. Sometimes there may be some tweaks and optimizations later, but often It's the exact team that you have is the exact team the buyer wants. So you've got all that staff expenses added up in here. Now they've got some subcontractors. They detailed out that. I give them a good A+ on that level of detail. The insurance, they've got, this is sometimes can be nuanced. If you've got insurance, if you've got healthcare, I need to know if it's an owner's healthcare or staffing healthcare. If you've got key man insurance or other stuff that's specific to the owner, I need to know about the nuances of that. Some of that I can add back. We've got some office expenses. They detailed out here some very specifics. Office supplies. What did I ask here? And this is me asking, is the staff going into an office? Would the buyer need to keep the office? A lot of times people have their home offices and the staff is all remote. If that's the case, then we add all that back. If there's a physical location that everybody's going into and there's real office supplies and other office expenses associated to that real live location, I can't add that back in as an add back. Some other premises, expenses, repairs, utilities. I need to understand about that. Maybe they owned the property. So some of this could be an add back if they own the property and they're just doing, repairs and stuff. Like here's a big one. It's like $8,000 for repairs, cleaning and maintenance. I'm wondering if this, I don't remember, this has been a while, but I'm wondering if they owned the property, and I can often assume the buyer is not. Most of these transactions, in fact, I've never done a transaction where the real estate underneath of it sold. A lot of business brokers do. I just don't see that happening very often with these digital marketing and e-commerce businesses. But if you own the building or if you own your house and you're putting repairs and maintenance and stuff like that as an expense, I want to try to add all that back, but I need the details of it. Because if a buyer, let's just say they do need a physical office and they're going to rent it from you, they may not be paying for repairs. They may just be paying for regular rent, and then the landlord's paying for repairs. So there could be some nuance that we have to get into there. Professional fees. They've got some huge accounting fees in here, $15,000. Might be the end of their fiscal year because I don't see anything else up until that. A lot of like tax prep and accounting fees. I'll add all that back in. All that back. Usually I'll add back bookkeeping, legal. I'll usually add back in. Depends on what kind of legal it is. I actually have a whole chapter about what I'm talking about in my book. And wherever you're seeing this, we'll make sure to have a link for the book. If you're from, I've got this going out in different places. This will end up being on YouTube. So this is going to go out with some, with the Flippa universe as well. And depending on where and how you see this, you'll have access to get a free copy of my book. And there's a whole chapter about the labeling of your chart of accounts and how that can be done in such a way to really help us when we go to sell. Okay, we've got some professional fees, telephone, communication. This all looks good. Love this. Looks good. We've got some other expenses in here. Okay, so they've got some exchange gains and exchange losses in here because they're in Canada. All right, and then boom. I summarize this again in a seller's discretionary earnings worksheet with all the revenue, cost of sales. Got a weird formatting thing. My OCD is kicking in. Operating expenses, net income. So we're taking all of the revenue, subtracting these. I think the formula in here. Excuse me. So we get down to our adjusted earnings. We add back in amortization and interest. So that's figured in here. Hopefully the calculation's right, or maybe I screwed that up back then. This was an older transaction, so I may have taken some liberties or missed a few things that I don't do anymore. And then boom, look at all of these add backs. The more we show down here, the more complicated it is. And then negative add backs starts to create complication. People are like, what the hell does that mean? A really clean deal will have no add backs. And I have plenty of transactions where there's no add backs. And the way that my clients do that and they get maximum tax benefit is they have a holding company. And then the holding company owns the operating entity. And the operating entity flows all of its revenue and its operating profits up into the holding company of my client's business. And in that holding company, they put telephone, travel, all of that stuff. So all of that is held up in their holding company. When we list the business, we're listing just the operating entity. That's a really simple thing to do. It costs you a couple extra $1,000s a year to set it up that way, but it's going to save you a massive, and me, and buyers and lenders. So everybody saves a massive amount of friction and brain damage trying to go to market. So at the end, this business had $627,000 in seller's discretionary earnings. Did it sell? Okay, skip. Okay, did it sell? No, it did not. The financials, it was specific, but it was also complicated in the sense that all the add backs, it really was the add backs that got us here. So I'm going to put add backs. I'm also going to add in the seller's expectations. Seller thought the business was worth a whole lot more than it was. And listen, I'm an aggressive business broker, and I will list at and above market comps and see if there's buyers out there that are interested in it. But at the end of the day, the buyer has to be willing to pay whatever it is that the seller's willing to accept. The true value of these businesses is what an unbiased, third-party, uninterested buyer will pay a seller, not exchange between family and friends. This is a third-party buyer and seller. So a lot of digital marketing businesses, I can get listed and sold in the 3.5 to 5.5x range. This seller wanted more, felt like his team and his business was worth a lot more. This was something I listed 2.5, almost 3 years ago. I spoke to him in the last 6 months, still has not sold. And he's doubled down. He's doing it himself. God bless him. It won't sell. He won't be able to sell it. This was a complicated business by itself. And it's just like thinking, can you, if you're not a mechanic, can you change out an engine and do an engine swap on your own the first time? And do you want to? Should you be doing that when your business should be growing your business? If you can grow your business and your profit, I can sell it. If you know what price you want to sell it at, I can tell you how much it's worth right now to the largest pool of buyers and what you need to grow it to get to the number that you're looking at. If you're looking for a $10 million deal and you're only making $627,000 a year, it's not going to sell. It's not going to sell on any marketplace to any financial buyer or strategic buyer. And listen, the myth that strategic buyers pay more than financial buyers is absolutely bunk. I don't know who it is that's out there saying they sold to a strategic and they got a bigger value, but I promise you what I'm seeing in the market over almost a decade of doing this, looking at hundreds of transactions, is that strategic buyers often pay less than financial buyers. Financial buyers tend to pay more, but they need the team and they need some help, at least in a transition, to go along with the business. So this one did not sell. All right. Good with that. How are we doing on time? Okay, good. I'm going to stop sharing. And I'm back. So some good lessons on that one. Let's switch back over to an e-commerce company, and I'll show you that one. Okay, so this one, zoom in just a little bit. This is this is consolidated right here. What I want to see is what I've already shown, where it would have multiple, all 12 months. But in this one, just to speed things up a little bit and to breeze through here. It's another Amazon e-commerce company. Whether you're selling on Shopify, Amazon, Bold, Commerce, WordPress, I don't care what it is. These are all going to be very, very much the same. So you're going to have your sales. This one had some subscriptions. So this one actually was Amazon and Shopify. And that's nice to break out the different streams of income. If you're selling on Amazon, break that out. This what they were selling on eBay. Oh wow, they had a whole bunch of sales on Etsy too. Interesting. I forgot about that. Shopify. So if you've got different marketplaces or different streams of income, if you can separate that in your income on your income statement, that is really helpful. Buyers love to see that. And then again, you'll have a whole bunch of months here so we can see it on a monthly basis. Cost of goods sold. They've got a random cost of goods sold. I'm guessing this is Amazon, maybe, then a 3PL. So this is probably stuff that's shipping out from Shopify. If you can be a little bit more specific, that's helpful. If I would, in your chart of accounts, this is the cost of goods sold, specific for Amazon. That would be great. Although here now they're having total Amazon. So I don't know what this is compared to this and then this. So this is a little confusing here. eBay, we've got some eBay cost of goods, seller fees, that's fine. Etsy seller fees, Shopify seller fees, no big deal. Total marketplace related, gotcha. Okay, so product packaging, shipping materials, freight, that all looks fine. We've got some Stripe fees. Wow, it's really low. That's abnormally low. I would probably wonder why that's low if I'm a buyer. So I got a subcontractor in here. Don't know why. Maybe that's somebody helping at like a warehouse or something because it's under cost of goods sold. Then we've got expenses. So we've got some advertising expenses, Amazon ad spend, Google ad spend, product design and launch under advertising. Not sure why. I wonder if that's like just ad creative. Could be. And then we've got, some banking fees, subscriptions, some marketing. That looks fine. Insurance, nebulous. What insurance is this? Is this product insurance? Is this health care? I don't know. Would want to know. Okay, so we've got office supplies. And I think if I recall correctly, this one had a home office. So be nice if it said home office. That would look nice. Home office, because if it is, add back. I'd want to know. I'm here to help you. I want to make you more money. I get paid a commission on how much I sell you for. I make you more money. I make more money. Win. Don't you love that? Okay, so we got some other business expenses, got some utilities in here, some professional fees, accountant, financial advisor. This is something that happens a lot. When businesses start to do really well, sellers will put their estate planning, financial advisors and stuff in here. It's totally fine. I can add all that back. So back, legal fees, what kind? If this is some simple stuff like copyrights, trademarks, intellectual property, filings, if it's one time, I can probably add it back. If it's something that's ongoing, I might not be able to add that back. If it's a legal fee related to estate planning, I want to know so I can add all that back. R&D, a lot of people will put their Amazon purchases as R&D. Again, kind of like product samples. You can do that, and for the IRS, you can deduct it. But I need to know about that so we can add it back. Add back, is it real R&D? Sometimes people will do a bunch of R&D as a part of developing new products and a product roadmap. That's not an add back. That's something that any standard business should be doing. That's an expense related to what a business should be doing. A buyer is not looking to buy what's currently for sale and only that for sale. They're buying the process. They're buying the education, your knowledge on how you list multiple products and how you make repeat winners over and over again. If you've got one winner and it's only going to win for a couple of years and then it declines, it's not going to attract a lot of attention, and more than likely buyers are going to pass on that sort of a deal. If you've developed the process of innovating and creating and launching products and you've got a product roadmap, that's a business that buyers are going to want. I can still sell those single product companies that are, kind of have a life cycle. They just don't get as big of a multiple of something that's a bigger business that has a process. Still sellable, just there are different valuation methods and models. Some third-party sales going on here, a virtual assistant, no big deal. Credit card rewards. Okay, sometimes I can add this back. if you're using a lot of sellers will be doing their ad spends on their Amazon card or their Amex cards, and they'll be getting a ton of rewards and getting zillions of miles. Well, you get to keep all that. That doesn't transfer. And then those rewards, sometimes I can, if this is income that you're putting in here, this is actually kind of be a bit of a negative add back in this case. So this gets a little complicated, but we get through it. So PPP, this was an older transaction, kind of like around the time of the pandemic. And then there was the PPP and EIDL and all that sort of stuff going on back then. And so we've got some loan forgiveness in here. We need to understand all of that. Then we've got an accrual to cash basis adjustment. Oh boy, got to figure out what that is. I don't remember off the top of my head. So we've got to understand what all that means and why it's there and explain all that. So these are things that we just have to explain. Depreciation, we can add all that back. DJ related expenses. I don't remember if this seller was actually like doing some DJ stuff and if he stuck it in here. So he's got it all under discretionary. So this is all stuff that he's basically saying is like add backs. So all of this he's saying is add backs. Officer payroll, I totally get it. We can do one owner as an add back. Officer auto, no big deal. That's fine. Travel. Venue rental. I don't know. Maybe you got married and put that on here. It wouldn't be the strangest thing I saw. Okay, so boom, his net income at first glance, 482. What did we summarize it into? Whoa, zoom out. Okay, so we took all of that when we added back all of this other stuff, then we have $1.2 million in seller's discretionary earnings. So again, I'm simplifying it over the last couple of years. And you see how big things went. Bam, 2019. Bam, 2020. Bam, 2021. And here's a nuance here that buyers don't like to see. Why did this come down? It came down a little bit, but it came down. Why did this come down? It came down just a little bit, but it came down. They want to know. And before we go to, did it sell? Put in the comments below. Did this business sell? What do you think? Yes or no? No, it did not. Too many ad backs, complicated financials, very challenging personality. This seller, I did a video recently on my YouTube channel that you guys can look up is, what are buyers looking for? And one of them is they want to work with somebody that they like to work with. They want to work with somebody that can be a easy person to work with that can transition the business. I think the deal killer in this one was the personality of the seller. He was very negative, was very antagonistic, and was very tinfoil hat sort of person. So he was constantly on buyer seller calls. I'd have to tell him, stop doing this. He was constantly framing himself, his experience in the business in the negative. Let's be positive, folks. Let's talk about the things that we did well. This was an incredible business. He made a ton of money doing this. Let's focus on that as opposed to focusing and pointing out all of the negatives and letting all of your negative internal rumination just bubble up. That made it really challenging. And then his expectations, he wanted a bidding war and he wanted the best price to come from everybody. And it was a really challenging experience as the broker to be guiding him and giving him feedback and to be handling offers and getting really good offers. He had numerous good offers. And, but he wanted the highest number he didn't care who. Instead of following my advice, we want the best number we can get from the best buyer, the one that's most likely to close. Because a high number on an LOI it's toilet paper, folks. An LOI is complete total toilet paper. Until it closes, it means nothing. So he really cuffed my hands and forced me to solicit the highest offers from all these different buyers. And then he picked the top one without really understanding what the likelihood was that they were going to sell. When that deal blew up, which often happens in bidding environments, in competitive auction-like bidding environments, the highest price bidder often gets buyer's remorse and backs out of the deal. I actually don't like that. I don't like doing auction processes. I prefer to have a standard broker process where I create a competitive environment. We talk with each buyer individually. We get their best offer from them. We figure out which one's the most likely one to close. And then we go back to them and counter them and just them, one at a time. We don't want to have multiple counters going on at the same time, because if multiple people accept our counters, then we're like, what do we do? And the buyers, it absolutely blows up. If you make a counter and they accept it, and then you don't accept that they accepted your counter, oh my God, deal is done. They will not work with you. They're out of the race. So this one did not sell. Very challenging situation, complicated personality. Literally the last text that he sent to me, and I never heard from him again, was an expletive towards the buyer and probably towards me. And you know what? Sometimes that happens. You can't please everybody, folks. And we're back. Okay, checking in. We're coming up at the top of an hour here. I want to get through one more really quick. I've never seen anyone do this kind of content. Have you seen any of this anywhere? Leave a comment below. If you find this valuable, like I spent a lot of time thinking through like what's content that people would be interested in. Let me know if this is something that you find valuable, that you're interested in. And I would love to hear it. Okay, so I've got one more. Let's swing back over to the digital marketing world. A lot of my businesses I sell are e-commerce and digital marketing and stuff around that, because I just have had so many years experience in dealing with it. Boom, share. Okay, so we've got a digital marketing company here. Again, this is on our trailing 12 months period. So this one ended in January. Let me zoom out just a bit, get all this in here. Bam, there we go. So this was a process. Let's pretend I probably was taking them to market like in February of 21. So the end of February, they would have January backwards through February of the previous year. This is what's called a trailing 12 months. This is a great example of one that I would need. We've got all of our cost of goods. So they've got their service revenue. They just have one line for their revenue. They've got their cost of goods split up into consulting, SEO, some subcontractors, and some web services. Very simple. Starting off at $1 million in trailing 12 months, subtracting out the cost of goods, the gross profit, $855. Got some business expenses in here, some advertising costs, total expenses, $56,000, net profit, $798. I did a seller's discretionary earnings worksheet. Boom, that's our $1,000 or $1 million, excuse me. And we added back, all we added back was travel and meals. Boom. Total seller discretionary earnings, $802,000. Did this sell? Did this sell, folks? What do you think? Did this sell? Okay. Yes, it sold. We had 163 buyers. Where's the final sale price? Okay, so we listed it at 2.9 million. It sold for 2.6 plus equity, 20% stacked on top of this sucker. So technically, this was a pull up my calculator. Well, I'm not gonna do it right now, but you take 2.6, add another 20% to it. But just looking at this number here, we had a final multiple of 3.2 to 8. I sell these digital marketing companies for 4x all the time. The lower multiple for this was a one-man show. Literally, it was one guy doing everything. We still had 3 offers. Had 163 buyers. This listing actually turned into another listing for me because one of the buyers of this, one of these 163 people said, "Whoa, what if I could sell my company for, $2.5–3 million?" So I got another listing out of listing this company. It was fantastic. Love that. So we had 3 offers, 163 buyers, sold for 2.6 million plus equity. Yes, it did sell. Boom, done with that. That's all of the case studies we've got to show. I'm going to whip down and wrap up, folks. Thank you very much for staying with me. We've got just a few more things here. I'm going to talk a little bit about the market. So let me share, just kind of keep myself in line here. Let me shrink this up. Boop, 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 boop. All right, good enough. The market right now. This is a really good time to be prepping for sale, folks. We are in Q4. Yes, it's October to November now of 25. We are in prep mode for January launches of 2026. Interest rates are down. Buyer interest is up. When interest rates go down, buyers' interest goes up. Financing for buyers also gets cheaper. Sometimes that helps us out with multiples, gets us more buyers, which gets us a more competitive environment, which gets us better offers. So there has been, since I've started selling businesses professionally in 2020, it's been a seller's market, even through the pandemic, even post-pandemic, and especially right now. Since the day Trump got shot, there has been such a flood of buyers because the unanimous feeling in the country was that a Republican would take office and that Trump in office would be good for the economy, would be good for M&A, would be good for businesses, would be good for lending. And that has proven to be the case. We've got all-time highs now on the S&P. We've hit all-time highs in crypto. We're still having some fluctuations going on there, but he's killing it with tariffs and doing some incredible things that is creating a really, really competitive environment for us in the M&A space. There are way more buyers than there are sellers. For every one of my transactions, this is my guarantee to you. If you choose to have a free consultation and to list with me and to allow me to guide you through the process, to listen to my counsel, my wisdom as we go through this, and if you've got a business that's at least 2 years old, and if it's growing in profit, so each year it's going up, and the current trailing 12 months is going up, I guarantee you at least 40 buyers and an LOI in 4 months. I guarantee it. More than likely, it's going to be over 100. More than likely, we're going to have multiple offers. That if we're on the same page when it comes to listing. If you want to list at 10x, I can't make that guarantee, but we will have this conversation. I'll be able to tell you at the end of our initial free consultation, and you can book for a free consultation down in the link below, in the description below, wherever it is that you're seeing this. I'd be happy to talk to you and get to that information for you. This is a really important time to be thinking about selling. If you want to sell sometime in the next year or so, we need to be prepping to list right now, because it does take a couple of weeks to get listed and get ready to go. And we want to hit the market as soon as 26 starts. So if you're thinking about selling in the next 12 to 24 months, this is a really, really good time to be thinking about it. I'm going to go back to and really drive home the importance of patterns that drive valuation up. Growing cash flow. Folks, if you can keep your business on an uptrend, I can sell it. Guaranteed. No ifs, ands, or buts. I can even sell businesses that are retracting or declining in cash flow, but it is so much harder. So much harder, folks. I really need every star to align. I need the moon, Mars, Jupiter, Saturn to all align. It gets real complicated. But if you've got growing cash flow, I can guarantee a sale as long as you've got a realistic expectation for what the sale price is. And we'll talk about that. We'll talk about that all ahead of time. Clean, simple financials. Make them clean. The less ad backs, the better. Ideally, no ad backs. But if we have to have some ad backs, so be it. And then, can the business change hands? Can it transition from you to a buyer? That's super, super important. Let's see if I can shrink this thing up. There we go. Process overview. Okay, so what happens after financials check out? So let me just take a quick second. When you book a free consultation with me, we'll take some part in that. Sometimes it's one or two calls, and we'll look at your financials. After the financials are done, we talk about how we position the business, what your goals and expectations are. We get through all the nuance of commission structure. I want to align myself with you. I don't want to align myself antagonistically against you. That's not in my nature. I want to help you get the maximum exit for your business. And I want to be fairly compensated for doing so. I work with anywhere between 6 and 12 deals at a time. I am a boutique broker. I'm not the Ford Motor Company assembly line. I'm not the Tesla super factory just pumping out Model S's and Y's. I'm the Mercedes AMG division. I handcraft these transactions. I build the engines with these hands, with these eyes, with this brain. I can guarantee you a successful exit. If you listen to my wisdom, if you follow my process, I will get you an incredible number. I will make you a hell of a lot of money. I position the business for sale. We put together a pre-business NDA summary, and then we put together a monster of a SIM, confidential informational memorandum. This lists all of the information about the business, unique selling propositions, the competitive landscape. We do all of this work to simplify what is potentially a complicated business or transaction and make it easy for buyers. We get as many yeses as we can. I present those yeses to you. We talk about who's the best buyer, who's the best price, and then we try to get the best price from the most likely to close buyer. That's how this process works. That's where the success of this comes. If you've got any questions whatsoever, wherever it is that you're seeing this, feel free to leave questions in the comments. You can also click in the description for a complimentary copy of my book, for a link to a complimentary and free complimentary business consultation. Happy to chat with you, happy to talk with you individually. And I appreciate your time. Thank you very much for watching this video. I hope you gained some insights. If you're watching this on YouTube, please hit the like and the subscribe. Smash that bell so you get more notifications. I'm not doing garbage content, folks. I'm only doing content that's specific to sellers that are selling their businesses. These are founders of businesses in the digital tech, internet, SaaS, e-commerce, and professional services space that are servicing all of those. That's who I work for. That's who I target. This is the information that I have to offer. If you like what you saw, like what you heard, please drop a line. We'd love to hear about it. And if you've had a successful exit or you're curious about selling, I would love to hear from it too. And if you're not for sale or you're not thinking about selling, but you know someone else who does, or that is, I pay an incredible referral fee for folks to refer me warmly via email to their friends, family, colleagues, competitors as well. Thank you for your time. Have a great day.